Hey there, future traders. Today, we're diving into a game-changing book that's going to be your compass in the exciting world of trading. Imagine I'm talking to my own son or daughter, because trust me, I want you to kickstart this journey with the best insights. Technical Analysis of the Financial Markets, by John Murphy. Our guide for this adventure? Technical Analysis of the Financial Markets, by John Murphy. Don't let the name scare you. I've got your back, and we're about to break it down together. Chapter 1. The Basics of Technical Analysis. Alright, let's start at the very beginning, the basics. Imagine technical analysis like solving puzzles on a treasure map. In this chapter, John Murphy introduces you to the tools and techniques that will help you decode market patterns. It's like figuring out where the hidden treasure chests are buried. Here are some examples from the book. 1. Candlestick patterns. Think of candlestick patterns as the secret language of the market. Each candle tells a story about how traders feel. A green candle might mean traders are bullish, like they're expecting the treasure to be found soon. A red candle could mean the opposite, like they're being cautious about the path ahead. 2. Support and resistance. Just like a path through the woods, price levels act as barriers. Support is like a solid floor. Prices often bounce back up from there. Resistance, on the other hand, is like a ceiling. Prices might struggle to go higher. Imagine a treasure chest that can't be lifted beyond a certain point. 3. Volume analysis. Volume is like the cheers of a crowd. When lots of people are excited, the cheers are loud, high volume. When there's less excitement, the cheers are softer, low volume. High volume during a price move might mean everyone's really excited about that treasure. 4. Price trends. Trends are like following footprints on the treasure map. If you see a trail of upward footprints, it's like traders are hiking uphill towards more treasure. Downward footprints? They might be heading downhill, maybe toward hidden traps. 5. Chart timeframes. Charts are like different maps showing the same journey. You can zoom in for details, like seeing the texture of a treasure chest, or zoom out for the big picture, like finding the treasure island on a world map. Chapter 2. Dow Theory and its Applications. Now, imagine if we had a crystal ball to predict the market's moves. Well, Dow theory is the closest thing. John Murphy takes you through Charles Dow's genius insights, teaching you to read the signs like a seasoned explorer. Let's go through some examples now. Example 1. Dow's averages. Imagine these averages as snapshots of market health. When both the industrial and transportation averages are rising, it's like getting a green light, the treasure hunt might be easier. But if one's rising and the other's falling, it's like a yellow light, time to slow down and be cautious. Example 2. Confirming trends. Dow theory helps us make sure our treasure map is accurate. It's like checking footprints on a trail. The more footprints, indicators, confirming a direction, the more likely we're headed the right way. Example 3. Volume confirmation. Remember the cheers of the crowd? Dow theory uses volume to confirm if the trend is strong. Just like a stadium full of people cheering loudly for their team, strong volume during a trend move suggests a lot of traders are excited and on board. Example 4. Transitions in trends. Think of trends like seasons, they change. Dow theory helps us spot these shifts. When winter is coming, a trend change, you want to prepare, just like packing warmer clothes for a colder season. Example 5. Trends in unison. Dow theory syncs market indices, guiding us like a constellation of stars. When these indices move together, it's like finding a reliable North Star in the sky, a guiding light for our treasure hunt. Chapter 3. Chart patterns. Next up, chart patterns, our treasure map markers. Imagine these patterns as clues left by traders who came before us. John Murphy deciphers these formations, helping us predict where prices might head next. We are going to look at some of these examples of chart patterns. 1. Head and shoulders. Imagine the market landscape forming hills and valleys. A head and shoulders pattern is like seeing a big hill, head, between two smaller hills, shoulders. When prices start to fall after the head, it's like a signal that the path ahead might be downhill. 2. Double tops and bottoms. Picture two identical hills, double top, or valleys, double bottom, on the treasure map. It's like seeing the same scenery twice. Traders might take a different path after reaching that point, like a decision to explore a different route. 3. Triangles. Triangles are like puzzles on the treasure map. Prices move between two trend lines, forming a triangle. When prices break out of the triangle, it's like the map revealing a new path, leading to potential treasure. 4. Flags and pennants. Imagine flags and pennants as resting spots on our treasure hunt. Prices pause for a breather before continuing the journey. These patterns can signal that traders are preparing for the next move. 5. Cup and handle. Think of a cup as a place where prices dipped and then rose again. The handle is the small dip that follows. It's like finding a secret compartment under the cup. Prices might bounce higher after forming this pattern. Chapter 4. Moving averages. Now, moving averages might sound complex, but they're like the compass of the trading world. John Murphy simplifies it for us. Think of it as tracking the average footsteps on the treasure map to see where everyone's headed. Examples. 1. Simple moving average, SMA. Imagine the SMA as a path through the forest. It smooths out the bumps. When prices cross the SMA, it's like taking a turn onto a new path. The SMA helps us see the overall direction. 2. Exponential moving average, EMA. Picture the EMA as a smarter path tracker. It gives more importance to recent footsteps. It's like focusing on fresher footprints when deciding which way to go. 3. Golden cross. Imagine the short-term and long-term averages meeting like friends for a high five. When they cross, it's like getting a signal that the path might lead to potential treasure. The market might be about to shine. 4. Death cross. The opposite of the golden cross. Imagine it as a traffic light turning red, telling us to be cautious on our treasure hunt. When the short-term average crosses below the long-term average, it's like a warning sign. 5. Moving average convergence divergence, MACD. Picture the MACD as a detective comparing two paths. When the paths converge, it's like spotting a hidden passage on the treasure map. It could lead us to a different area where the treasure is hidden. So, my trading adventurers, technical analysis of the financial markets is your treasure map, guiding you through the exciting twists and turns of trading. Remember, just like I'm here guiding you, John Murphy's got your back in the world of technical analysis. Stay curious, keep learning, and let's kickstart your trading journey with confidence and wisdom. Now hit that subscribe button so you never miss out on more valuable insights.